Hi, this is Aldin. Welcome to my channel. Every year, I see the same questions come up again and again. Should I invest in VOO or QQQ? Even in 2026, with so much information available, these choices still feels confusing for many investors. Performance charts change, opinions shift, and headlines constantly point in different directions. But after years of investing through different market cycles, I have learned that this question isn't really about which ETF will perform better next. It's about understanding yourself as an investor. In this video, I'm not going to predict returns or make bold claims about the future. Instead, I want to share how I think about VOO versus QQQ based on experience, mindset, and long-term behavior. Because in the end, the best choice isn't one with the best chart, it's the one you can stay committed to when the market tests your patience. One reason so many people feel stuck choosing between VOO and QQQ is the overwhelming amount of information available today. Charts, rankings, and short-term performance comparisons are everywhere, and they often tell very different stories depending on the time frame you look at. Add in social media opinions and confident predictions, and it becomes easy to feel like you are always one step away from making the wrong decision. This confusion can lead to a constant switching, hesitation, or even avoiding investing together. Over time, I realized that the most of this uncertainty doesn't come from the ETF themselves. It comes from trying to make perfect choices in an imperfect environment. When you shift your focus away from comparison and toward long-term behavior, this decision becomes much easier. To me, VOO represents stability, discipline, and long-term ownership of the US economy. Holding VOO means accepting that I don't need to chase the fastest growing companies or predict which sector will lead next. Instead, I am choosing to own the bull market and let it grow alongside the economy over time. VOO fits an investor who values consistency and can stay patient through both strong years and difficult ones. It doesn't promise excitement, but it offers reliability and balance. When I think about VOO, I see it as a foundation, something that allows me to stay invested without constantly questioning my decisions. It's the kind of the ETF that supports a calm mindset and makes long-term investing feel sustainable. QQQ represents growth, innovation, and a higher level of volatility that requires emotional strength to handle well. Holding QQQ means believing in the long-term impact of technology, productivity gains, and innovation-driven companies, while also accepting that their ride won't be always be smooth. QQQ can move faster, both up and down, and that volatility can be challenging if you are not prepared for it. For me, QQQ fits an investor who understands their risk tolerance and can stay committed when the price fluctuates sharply. It's not about chasing trends or short-term performance. It's about having conviction in long-term growth and the discipline to hold through periods of discomfort. Over time, I have come to realize that the real difference between VOO and QQQ isn't found in return charts, it's found in investor behavior. Both ETFs can perform well over long periods, but they ask very different things from the person holding them. The more volatile an investment is, the more emotional discipline it requires. When the market drops sharply, the question isn't which ETF is better, but whether you can stay invested without panicking or second-guessing yourself. The best performing strategy on paper means nothing if you can't stick with it during difficult moments. That's why I believe the better ETF is always the one that fits your temperament and allows you to stay consistent through both calm and turbulent markets. In 2026, the way I think about risk has less to do with the market forecast and more to do with my personal situation. Risk isn't just about volatility on the chart, it's about how changes in the market affect your behavior, your sleep, and your ability to stay consistent. Focus like income stability, time horizon, and life responsibility matters far more than trying to predict which ETF will outperform next. As life evolves, risk tolerance naturally changes as well. What feels acceptable earlier may feel different later, and that's normal. For me, managing risks in 2026 means choosing a level of exposure that allows me to stay invested with confidence rather than constantly questioning my decisions when the market becomes uncertain. If I actually had to choose only one between VOO and QQQ in 2026, my decision would come down to which one I could stay invested in with the least emotional friction. At this stage of my journey, consistency matters more to me than chasing higher potential returns. That naturally pushes me toward an option that offers broader diversification and a smoother ride over time. It's not because growth isn't important, but because staying invested through uncertainty is far more valuable than trying to optimize performance on paper. Choosing one ETF isn't about declaring a winner, it's about choosing the path that gives me the highest chance of staying disciplined for years, not months. Even though I could choose only one if I had to do, the reality is that I personally hold both VOO and QQQ because they serve different roles in my portfolio. VOO gives me a strong, stable foundation tied to overall growth of the US economy, while QQQ adds an element of long-term growth driven by innovation and technology. Together, they create a balance that fits both my financial goals and my emotional tolerance. Holding both allows me to participate in growth without relying entirely on one style or one outcome. More importantly, this combination helps me to stay invested through different market environments, which is ultimately more valuable than trying to perfectly optimize returns with single choice. If you are trying to decide between VOO and QQQ today, I'd encourage you to look beyond charts and ask more personal questions. Which one can use realistic holdings through difficult markets? It's easy to feel confident when prices are rising, but the real test comes when volatility shows up. Think about how you react to uncertainty, how stable your income is, and how long you plan to stay invested. There's no universal right answer, and choosing one over the other doesn't make you smarter or safer. What matters most is selecting ETFs that align with your temperament and goals so you can stay consistent without constantly second-guessing yourself. After years of investing, my perspective on VOO versus QQQ has become much simpler. The best ETF isn't the one with the most impressive chart or the strongest recent performance. It's the one you can stay invested in when the market challenges your patience. Long-term success comes from consistency, not from making perfect choices. Whether you lean toward VOO, QQQ, or a combination of both, the most important thing is build a strategy that fits who you are and allows you to remain disciplined through different market cycles. When you can stay invested with confidence and clarity, the rest tends to take care of itself over time. Thanks for watching, I'm Austin, and see you next week.